Well, hello, everybody. It's once again that time of the week, the weekly market analysis. This is for the week ending on December 4th. And I'm joined here with my co-host, Jill Malandrino, global markets reporter from NASDAQ. How are you today, Jill?
I am doing well. Thanks so much, Mike.
All right. It's our best favorite time of the week.
It is.
As we look ahead to next week as well. This week, we had a pretty sharp drop in employment growth. It's a little bit surprising. I don't know about you, Jill. What do you, obviously, certainly we have also a sharp spike in COVID cases and deaths, but what do you account for the lower than expected increase in employment? That was kind of a little bit of a surprise to me.
Right. Well, it's not so much of a surprise to me. Things are starting to lock down again, and whether there's lockdowns or not, some people have taken it upon themselves to not be active and out there and going to restaurants and doing things that the service industry provides for. So it's not that much of a surprise. And I think, we certainly have another month to 2 months in the Northeast, at least, until the data catches up from Thanksgiving, and I'm sure there'll be Christmas gatherings as well. There's really no way to sugarcoat that. And my concern is it's not necessarily what we're seeing in the near term. A lot of these businesses, right, they're not going to, some of them just aren't coming back, right? So these jobs aren't a temporary thing, they're a permanent thing. And it's not like the services industry in the near term is going to continue to grow, right? So, it's sadly not a good thing.
Yeah, so I mean, it was a little bit of a surprise to me because it was a pretty significant drop, and obviously we know that employment numbers lag. So I think that this is probably not a good trend, meaning that usually it's the opposite, right? We go into the Christmas season and you have that seasonal employment spike. This year, there's not going to be any seasonal employment spike. I mean, it seems like COVID is the Grinch that stole Christmas this year, and maybe potentially the Santa Claus rally. But I mean, stocks did not seem to be too massively affected. I mean, the market held up pretty well, regardless of that pretty negative number, wouldn't you say?
Yeah. I think that's what's so challenging for everyone is to understand why there's such a big disconnect with the market versus what's happening on Main Street and with the economy overall. I can't wrap my head around it. I know stock market's a discounted forward-looking mechanism, blah, blah, blah. But you know what? Besides the pullback that we saw in March and April, it's been saying this for the past 9 months now, and things have not improved. So it is a head scratcher. Certainly, there are a lot of things to look forward to on the horizon. I guess part of it is the expected recovery, will be better than people have expected. And I think that also is going to translate into earnings as well. Some of these stocks have had pretty big runs and their valuations have ran up as well, but their earnings are showing it. So yeah. I think the expectation is there. And I'll tell you what, again, it's certainly an early trade. But I think, Mike, when we look at the back half of the year, when people have been vaccinated and travel opens up again, it almost makes you wonder, like, what's productivity on the desk going to look like? I'm taking vacation, or as soon as we're ready to go, I'm out. I'm using all of my time. And I never take all my time. When the markets are on, I'm, for the most part, on. Plus, I travel a lot for my job, so I don't always use my vacation time. She's using it all. But I can't wait to get out. So there's going to be
productivity might go way down as everybody takes all their stored up vacation time from all of their remote jobs.
100%. But again, it'll be interesting to see. So when we had a pivot from leaving the office, going home, that was one thing. It was you're only going to one place. Now you're taking millions and millions of Americans, and they will be going back at some point. Maybe some will remain home, maybe some will be in a hybrid fashion, but it's just interesting to see how the infrastructure, how quickly the services businesses can come back online, because unfortunately we've had the worst response globally, and there really, is no clear path to what return to work looks like.
Yeah. Well, I will say one thing is for certain is that the country will certainly not be the same, and our response and certainly this Christmas is not going to be the same. And that brings me to my next item. I do have one other thing to say too, is I think the stock market, I think we had a very, very significant move down in the dollar over the last week and a half. It seems to me like the dollar dropped significantly. So a lot of times I think that people forget that the dollar is the floor that stocks are built on. So if the floor goes down, stocks go up because stocks are denominated in dollars. And so the value of a company like Facebook or Apple, with huge international holdings, that value of that company doesn't change. So if the dollar gets weaker and the company's value stays the same, the price of the stock almost has to go up because the dollar that it's priced in has gone down in value. And over the course of this last week, 2 weeks, I think the dollar has dropped pretty precipitously, which also has helped gold, has also helped Bitcoin, which we're going to be looking at, and it also helped all the stocks in the stock market. So I think that we always have to keep in our mind that the dollar is the thing that is continuing to push stocks higher, even if the companies didn't even change value. So that's one thing. And then the last thing is that obviously it's this holiday. This is going to be a holiday season like none of us can remember. What is on your holiday stock wish list? Like, what do you think is going to be hot? I'm very interested to hear what your thoughts are in this Christmas season and holiday season.
Not even just for Christmas and holiday, but anything as it relates to alternative renewable energy, EV. I think that is the future. So I think that will be interesting to watch. Now, I typically think a little bit longer term. So if you were to get pullback in any of those, a pullback in any of the technology stocks that have led the way, as we continue to question valuation, these are the stocks that aren't going anywhere, right? Even when we do return to the office, people are still going to use Zoom. They have figured out how to do things cheaply, more efficiently. It opens up a wider investor base because you can reach more people. So the virtual component, whether it's side by side or exclusive of physical presence, will always be there. Microsoft, Apple, Google, as things continue to move more to the cloud. All the semiconductor names that have had a fantastic run. I mean, Micron has, Micron's always on our list when we do this.
Micron, blast off.
It's it is always one of the most heavily traded stocks on the NASDAQ 100 almost every single day. We have this like bubble chart, I forget what it's called, but every time you walk into market site, like the biggest bubbles, the most heavily traded is always Micron. So, the semiconductor space, what do you think is going into the renewable energy and the cloud and the EV and all semis? So
absolutely.
Those are the spaces.
Yep. AMD, Micron, NIO seems to be on that list all the time. NIO, I guess it's like the Tesla of China, seems to have been on a crazy run. So let's take a look at some of these charts. So first off, we got the NASDAQ basically breaking out again into new high territory. This is the QQQ weekly. It's kind of taken out the high from the prior high that was established a couple of months ago prior to the election. So we're pressing those highs. It's kind of on a green chain because it's just green day after green day after green day after. It's not up massively. The volume has certainly dropped off considerably, but it just seems to be pressing green and pressing higher. It's almost like a melt higher. And I really account that to the dollar because when you see that kind of melt higher, it's like almost as if the floor is rising, right? So the dollar goes down, that pushes the floor up for the NASDAQ and for the S&P and even the Dow. And you could come here and see the same kind of thing. It's just kind of this ascending wedge higher as it presses higher and makes a new high on the SPY, on the weekly and on the daily. Very, very clearly defined W formation, W with handle on the SPY. And I think shockingly enough, the DIA, the industrials really look the best because I think that they were kind of neglected a little bit during the early part of the pandemic recovery. And now they're starting to kick back in and they're pressing higher. And that really brings me to the next slide, which is gold, which we mentioned in the DAS newsletter. And Jill and I have been mentioning here really pretty much week after week after week. It has underperformed lately. But once it pulled back to this key support level at 165, I think that's, we at 165 on the GLD, which is the ETF tracking stock for for gold. We came down, we kind of retested that low, and then we spiked off that immediately. You could also see that that's the 50-period moving average there on the weekly chart. So you could see we kissed that 50-period MA and blasted off, and we seem to be moving back to the top of that kind of pennant formation. I would say no, it's a bull flag formation. And then that brings me to Bitcoin, which Bitcoin looks like it may start to be showing some signs of topping out. It came into that prior high resistance. So this might be a short-term top on Bitcoin, certainly benefited by the election craziness, certainly benefited by the weakness in the US dollar. Volume has been very, very high, on GBTC, which is a Bitcoin tracking stock. And you can see it's kind of consolidated here near the highs, but it is put in a weekly red bar and looks like it might be doing what's called a small N formation. And I was going to test out my wonderful drawing capabilities and show what the small N looks like. It's like a cursive letter N. It would come back down to that level. And that might be a good level of support, maybe an area of demand where people might want to get back into it if it does pull back that far. Who knows? But certainly that's something that we'd like to keep an eye on. But that is very often a pattern called a small N. Could consolidate, could continue to keep going higher, but certainly wanted to show out, that this made this kind of V pivot and has finally put in a red week after many green weeks. Here is the ETHE, which is Ethereum tracking stock. Really, this is really showing a lot more strength. And you can see this is a measured move. So it made a nice measured move up. It's made a small pause or pullback right here in the middle. And then it's made the secondary move up. So it's kind of made what we would call a 1, 2, 3 continuation pattern. And it's kind of at the end of that 1, 2, 3 continuation pattern. So again, this might be a short-term pause. And I think that there's probably going to be a lot of profit taking in Bitcoin and Ethereum, maybe locking in some gains going into the end of the year. That seems reasonable. Might pause here for a little bit. We also have this kind of prior resistance level on Ethereum. It's kind of a short-term top area where it may pause and relax a little bit, before the end of the year. That brings me to volatility in general. Volatility in general is just saying that the market is really, really at a very low level of volatility. I mean, it's almost at pre-pandemic levels, which is a key level of support. Probably when we get to the actual level of support, we might get, a slight reversal, but we're not there yet. And we're going into Christmas, and unless there's a major catalyst, I don't see a reason for that volatility to spike. One thing we haven't looked at in a while, and I really wanted to ask you, certainly, what are your thoughts on oil, Jill?
Well, it goes back to what you were saying before with the dollar, right? Nothing has changed substantially in the demand picture at all. If not, there's more supply in the system that's actually needed. So it really does come back to the dollar because the demand picture hasn't changed. It's not like corporate travel is upticked at all, and it most likely won't until at least the second half of next year. So I think the move that we've seen in the commodity space is really predicated on that because there is no new news out there. And I really think that's what it's based on.
So I had a meeting, and this is funny because this is exactly what you said. I had a meeting with a company yesterday, and they were like, we're not doing any networking at all. They said, we're not traveling at all. Our travel budget is 100% full. Our networking / conference budget is 100% full at the end of the year. We have spent nothing from our networking budget, nothing, like our conference budget, our corporate spending, our expense accounts have hardly been used. And they're just dumping the money into digital marketing.
And that makes 100% sense, Mike, because first of all, if you were to put on an event, no one's going to go. There's not one management team on the planet that's going to risk their executives or their top performers, right? It's just irresponsible. And just like everything else, whether you're looking at bonds, equities, FX, digital assets, retail, industrial, finance, everything is becoming digitized. You'd be crazy not to allocate that extra budget that you've saved, which is always that in your real estate budget is always your biggest component, and not invest that into your technology spend. It's a gift. So I think that makes total sense.
I just, when you said that a little while ago, that was exactly what I thought. I mean, they were like, we haven't spent anything on expense accounts. We haven't spent anything on conferences. We haven't spent anything on travel. So we're just going to dump it all into digital marketing. That's it.
Yeah, me alone last year, I think my expense budget had to have been 120,000, something like that. Do you know? That's just one person, right? Yeah. Imagine the thousands of people that are responsible for travel at NASDAQ.
It's crazy. Right. It's really crazy. That money is just being dumped into digital marketing because they have no other way to acquire clients. They said we have no other way to acquire clients, especially small to medium-sized companies. So we might as well dump it into digital marketing. On that note, okay, we have an old school, kind of old industrial company, which we both mentioned going into the election that X was going to be a big winner if no matter who won the election, but specifically if Biden won the election, that the infrastructure play was going to be in full effect. And if you look at this chart of X, I mean, pretty much a blast off this blue line is the election. Here is U.S. Steel X, and you got a blast off in U.S. Steel. I mean, it basically just surged to the upside.
Well, I wonder if companies like that, steel companies, and the ones that have a lot of exposure to the China trade war situation, it seems to be that Biden's administration and Xi's administration, Biden's a career diplomat. He understands how to negotiate. If that could potentially open up, I guess, more free trade.
I think
semiconductors. So. But that's the whole thing, Mike. We're out of TPP. There's 14 Asian nation member organizations with the world's largest trade deal signed ever. U.S. is not part of that. Yep. We can't get left behind. So I'm wondering if these companies that traditionally have the exposure to China are getting a bid off of that.
Yeah, I mean, that was exactly the rationale that anybody who got hurt by the China trade war was going to be the biggest beneficiary. And I mean, I just have to point out that, you get a company like U.S. Steel that, effectively is on its, it moved from, $10, $11 to $15, $16, almost $17 now. I mean, it's an explosive move for U.S. Steel. And that was one of the stocks that was on our list as election winners. The other one, which is certainly I like to game a little bit with my son. So Activision Blizzard, I think Activision Blizzard looks like it has a great chart from a technical perspective. It just broke a beautiful downtrend line. We're going into the Christmas season. I mean, my son, every time he talks to me, he's like, oh, can I buy a card so I can buy this video game on the Xbox? And I mean, that seems to be everybody's virtual. Kids are stuck at home. They're buying whatever cards they need to get skins or whatever thing else that they need to buy inside of their video games. So to me, I look at Activision Blizzard as a potential big winner. You can download them right into the portals, right? You can download them right to Xbox, right onto your system. And that also brings me to the next one, which I'm going to jump ahead to, which I don't think I've ever talked about Sony Corporation, but Sony's been on a tear. Sony has a new PlayStation coming out. This is I guess it's the PlayStation 5. You can't find it anywhere. Santa Claus can't even find the PlayStation 5. It's very, very difficult to look at. I don't know if it's going to be a big hit or not, but it certainly seems like Sony, might have a winner there because the stock is on a tear. Also benefiting from the U.S. dollar weakness because Sony is an ADR, American Depository Receipt. It's listed in Japan. Japan's currency has been very, very strong against the U.S. dollar. It's usually considered a safe haven against the U.S. dollar. And Sony has certainly benefited from that. Now, I'm very interested to hear your thoughts on Amazon, okay? Is the game over? I mean, short term, Amazon's underperforming. So what do you say, Jill, about Amazon?
Mike, I think I think you're having some tech issues. You're going in and out. So I think I heard your question correctly.
No, I said, what do you think of Amazon?
Yeah,
Is the game over? Like, the chart seems to be underperforming lately, but it certainly could just be consolidating for a huge breakout. And you did say earlier that this dip might be the opportunity to buy, meaning it might be a good opportunity to get into these tech companies longer term. So Amazon, slight underperformance. What do you think about it going forward into Christmas?
Right. Yeah, you know what? I mean, when we think of Amazon and retail, it'll be interesting to see how the consumer performs, because so many purchases were accelerated as a result of Prime Day in October, and for some other reasons too. I never, ever, ever shop until like the 23rd or 24th of December. I have accelerated all of my purchases. I'm actually, I think, done, which is nice. Part of it's having the time and being at home. The other part is the shipping situation is going to, if you do not have your orders in by now, beginning of next week, there's a very good chance that it's going to be a challenge to have it arrive either to yourself or where you're shipping it to. We heard the news this afternoon that I think it was UPS is limiting the amount of orders they're allowing to go through. Nike, and I think the Gap was the other one. Clearly, they're planning for some, logistical challenges. So, as far as the consumer is concerned with Amazon, it really remains and to determine what the season was. But of course, that's not a money-making business for them. It's AWS that drives it. Anything that's cloud-related is really what's going to drive it. And the newer technologies that come out of there, whether it's AI, machine learning, that's where the money's made. So,
well, I mean,
and that's only going to, the cloud's only going to grow.
Absolutely. And I mean, the chart does look like a consolidation, which could break out either way. So I think Amazon is definitely one to watch as it breaks out of these kind of narrowing trend lines. The trend lines seem to be getting tighter and tighter. Speaking of one stock that might be a big winner, certainly a big winner of the China trade war already, if that gets unwound, which would be Apple. Apple looks like it's putting in higher lows. And if it does break out above the red line indicated here, this horizontal red line, really the only place for Apple to stop is the prior high. Apple certainly is one of these companies that had a lot of exposure to China and may be a beneficiary if that gets unwound. Last but not least is 3M. Just in an uptrend. Again, this kind of old analog corporation, lots of international exposure, just certainly another beneficiary of potentially the unwinding of the China trade war. All right. Well, that brings me to our next trading competition. We have the One Best Trader competition, number one best trader competition. Registration runs through Sunday, December 6th. There's only 2 days left. Once again, Jill and I's favorite time of year doing the trading competition. It's going to run from December 7th to December 18th, just before Christmas. Thank you so much for watching our live stream. We're going to offer you a $50 off number one best trader competition. All you have to use DAS50 at checkout. That is your coupon code. So it's only $100 at checkout. Visit onebesttrader.com for more information and to sign up. Winner's name, as always, will be displayed at the NASDAQ Market Site Tower in Times Square. Be a guest of Jill on Trade Talk for an interview. We'll also have a virtual lunch with a special guest from the trading world and a lunch provided by DAS. Up to 6 months of DAS Trader as well, the DAS Trader Pro platform on whatever broker you're using as part of the trading competition prizes. Some additional updates. Stay up to date with all things related to DAS Trader by signing up to our monthly newsletter. Also, we made some really great market analysis in that newsletter. Simply fill out the form at the bottom of our webpage, at the bottom of www.dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, for market analysis and reminders. And certainly, if you haven't registered already with all of our social media outlets, we are on LinkedIn, Twitter, Facebook, and Instagram. And that pretty much brings us to the end. Have a wonderful weekend, Jill.
Same to you guys. Thanks as always for having me.
All right. See you next week. Only a couple more shows before the end of the year. I think we got 3 more shows. Well, 2 more shows left, right?
Yep.
So all the best. Have a great weekend. Bye-bye, everybody.
All right. Take care, everyone.
Ciao.